Alright guys, Jason Graystone here from Trade Empowered. This week's video, I want to go over something that I get tons and tons of questions on, and that is RSI divergence. Now, this is one of the most common questions, and there's tons and tons of information out there on RSI divergence, but I thought I'd break it down to you guys in the simplest way as possible. You guys know that I don't use tons and tons of overcomplicated indicators. You see, or you go onto TradingView, or you look at some traders' charts, and they're just full of indicators, oscillators, all different markings all over their charts, and it really doesn't need to be that complicated. So I do use the RSI. I don't use it as complex as some of the other traders out there. Some people like to use moving averages to stop entering a trade early, for instance. But I'm going to go over the basics on the differences between RSI divergence, regular divergence, and hidden divergence, and take a look at the charts and identify some of those in the charts as well, where we've had situations for a trend continuation trade and how you might use the RSI there, and a counter trend setup where you might use the RSI there. So sit back, grab your coffee and your pen and your paper, and I'll see you in a minute. Alright, so I'm not going to actually go over what RSI is, because, you know, if you're watching this video, chances are you already know what it is, and if you don't know, then you can learn all about it in the FX Basics course below. But just know that it's an oscillator, and when traded properly, you can really use it to your advantage as a discretionary edge in the market. And the great thing about divergences is that you're usually buying near the bottom or selling near the top, which makes the risk on the trades quite small compared to your potential reward. So I'm going to go over the two types of RSI divergence, which are commonly known as regular divergence and hidden divergence, and they both indicate different opportunities. So now, if price is making a higher high, the RSI should also be making a higher high. And if price action is making a lower low, the RSI should also be making lower lows. Okay, and if they're not, then that means that price and the RSI are diverging from each other, and that's why it's called divergence. And it's good to have in your toolbox because, as I said, although I don't literally trade based off of the RSI, I use it as a filter which allows me to add confirmation to my trading setups. So the first type is regular divergence, and this can be used as a possible sign for a trend reversal, counter trend, or CTS style trading opportunity. Those of you familiar with CTS, right? And that, as I mentioned last week, that is a style of trading that we teach on the Ultimate Trader Transformation course. But if price action is making higher highs, but the RSI is making lower highs, this is considered to be regular bearish divergence, and this normally occurs at the end of a bullish trend. So after establishing a second top, if the RSI fails to make a new high, it's likely that price action will fall because the market's running out of steam, and price and momentum are normally expected to move in line with each other. So if they're not, there's chances are the market's going to see a reaction there. So let's look at this chart here, for instance. This is the Aussie CAD. You can see markets putting in higher highs, higher highs, higher highs, and you can see that what RSI's done is put in a lower high here. Okay, so we've got higher highs, bullish trend, lower highs on the RSI. So once the second top is made here, you can see we've got this double top here, this retest. We failed to put in a higher high. And what you see is, after that, you see price action fall to the downside. We actually can't put in a new structure high, and we see a reversal. So you can see how effective that is when used correctly, and that is called regular divergence. Okay, and that's the same in a downtrend. So if we take a quick look at a downtrend, you're going to see the same sort of thing. Okay, so we're putting in lower lows. RSI is putting in higher lows, and we get a little retest of structure here down in this DSR level. A retest of structure, we fail to put in new lows, and then we see a reversal and we see price action move to the upside. So that again is regular divergence, and I've given an example in a bullish trend and a bearish trend. So the next thing we want to look at is hidden divergence, and there's a common mistake made between the two, so I'm going to go through what hidden divergence is and how you can use that, and it's really more for a trend continuation style of trading. Right, so as well as using RSI as a signal for a potential trend reversal, they can also be used as a possible sign for a trend continuation. Now, hidden bullish divergence happens when price action is making higher lows. Okay, each time we put in a higher high, we make a higher low. Okay, and the RSI is making lower lows. So you can see we've put in our higher high, higher low, but you can see RSI is actually making a lower low here. All right, and this can be seen when the pair's in a bullish trend or an uptrend. And once price action makes a higher low, look at the RSI. If we've got a lower low, that means we've got some hidden divergence, which can be a strong signal for a trend continuation. And you can see in this case, we continue to the upside. Okay, so that's an example of hidden divergence in a bullish trend. So lastly, we've got a bearish trend. So here, for instance, we are in a downtrend, and you can see as price action puts in lower lows, lower highs, you can actually see that the RSI is actually putting in a higher high here. Okay, there's some divergence on this. We've got a lower high, we've got a higher high on the RSI, which indicates a hidden bearish divergence. And then what you see is a trend continuation to the downside. Okay, so those are the examples of the four main common confusions. So we get asked questions about what is divergence, what is RSI divergence, what's regular divergence, what's hidden divergence, and those are some examples for bullish and bearish, both regular and hidden. And what I've done is I've created a little PDF cheat sheet type thing that you can go and download. It's below this video. Yeah, it's yours to download, print out. I recommend that you just keep it above your trading desk just for a reference. All right, so that's it, guys. And if you're interested in learning about the RSI, remember you can go over and grab that FX Basics course as well, which is down below. Everything you need to know to get started without jumping into a huge investment. Very cheap course, well worth the money, and if you're thinking about getting your feet wet in trading, it's definitely the place to start. So till next week, guys, see you then. All right, guys, so that was it. That was the RSI divergence video. Hopefully you got value, because I do get a lot of requests on producing a video for RSI divergence, so hopefully I've done it justice. I didn't want to go too detailed into how you might use it with moving averages and all that stuff, and you know, by all means you can go out and take a look online for yourself if you want to find out more information on that. Or you could just realize that you don't need tons and tons of different indicators to be successful in your trading. Really, it just boils down to understanding how to read price action, and then all you need is a few different indicators to use as filters, you know, so that you're not getting in every trade that presents itself. Remember, you only want to be getting in the highest probable trading opportunities. So if you haven't already been over to the website, go over to the link below this video, and you can take some free training I'd recommend watching Into the Grey. I know I recommend that video a lot, but it's a 3-hour training video for free. And then after you've watched that one, go over and watch the 2618 training as well. You're going to get a lot of information and a lot of valuable information on how to read price action and the way markets move. So if you haven't watched that, make sure you set some time up to go and watch that. I appreciate it's long, but you really will benefit from it. And if you're interested in coming into the live room and watching me do this stuff every day, then go over to the website link below, click on the London Live Room banner. You can come in for a free week, and then I look forward to working with you in there. So till next week, guys, take care, and I'll see you then.